last trading week showed signs of a cooling labor market in the United States. The pace of employment growth has begun to slow down, potentially prompting a pause in the tightening cycle of the U.S. Central Bank. Let's discuss how traders reacted to this news in our video review on the foreign exchange and commodities markets. Reflecting on the Federal Reserve's next steps, investors pushed the US dollar back to the levels where it opened the week. The US dollar index, which demonstrates its strength against the basket of 6 major currencies, was down near the 103 level. However, it closed slightly above the 104-point mark thanks to the comment by the ECB representative, which we will discuss in more detail shortly. As for the Fed's auctions, the majority of investors believe that the Federal Reserve will maintain interest rates at the current levels. While the future auctions of the U.S. Central Bank seem relatively clear, there are certain doubts regarding the plans of the European Central Bank. On a Friday, ECB representative Boris Vucic expressed concerns about signs of a sharp slowdown in the region's economic activity. Decelerating economic growth should affect inflation, which means there might be no need to raise the interest rate. Notably, Vucic has always been known for his hawkish stance. If such a pronounced hawk starts talking about a possible pause in tightening policies, it's highly likely that the rest of the governing council shares the same sentiment. As a result, the euro sharply declined at the end of the last week's trading, dropping to a level of 1.0780. The British pound mirrored the movements of its European counterpart and declined to a level of 1.2580 by end of the trading week. Throughout the week, there was sustained demand among investors in anticipation of the Federal Reserve keeping its interest rate unchanged. The British pound remains bolstered by expectations that the Bank of England will continue its tightening cycle. The Bank of England's chief economist, Hugh Peel, recently stated that the central bank remains concerned about persistent inflation as a core price growth has not yet fallen in the same way the headline inflation has. The Bank of England has raised rates 14 times since December 2021, and investors currently see a 75% likelihood that rates will be lifted to 5.5% this month. The Japanese yen could have benefited from this background, indicating weakening employment conditions in the United States. However, the yen remained under pressure from the US dollar, trading close to its lowest level in more than 9 months. It was hovering near 146 against the greenback, and the level that prompted Japanese monetary authorities to intervene in the currency market last year. As for the central bank's monetary policy, it's likely to stay the same in the near term. Thus, Bank of Japan board member Naoki Tamura stated that the central bank will maintain its ultra-soft monetary policy, as he's still unsure whether the targeted inflation rate of 2% can be achieved solely with the support of the central bank. Meanwhile, Japanese Finance Minister Shinichi Suzuki said that currencies should be set by markets, although sudden moves are undesirable. Gold posted a rise over the week, and the precious metal increased in value, reaching the level of $1,940 per troy ounce. If central banks pause the tightening cycles, gold has a chance to fully recover its lost positions. Oil prices also saw a notable increase. News about major oil-producing nations, Russia and Saudi Arabia, extending their supply cuts, triggered a surge in the price of a Brent crude oil above $89 per barrel. Moreover, data regarding China's business activity brought optimism for global oil consumption. You have watched Forex and Commodities Markets Review on the InstaForex TV channel. We wish you profitable trading, subscribe to our channel and see you online soon.